Well, let's now move on to a CNBC-TV18 exclusive conversation. Malnutrition is a bigger problem than obesity in India, says Varun Berry, Executive Vice Chairman, Managing Director and CEO of Britannia Industries. In a conversation with Mangalam, he speaks about the demand trends, the growth outlook as well for the sector. Take a look.
India is a country where, malnutrition is a bigger issue than obesity.
Yes.
Right? When you are at the bottom of the pyramid and you need bhook pyas as the most important thing, right? There's nothing wrong with our products, right?
Yes.
It's basically wheat, oil and sugar, right? Which are all basic nutrients, right? And it's the cheapest form of food. It's cheaper than any other food in the market, right? Now, you are an evolved consumer. You will have a different portfolio to choose from, right? Which will be much healthier. But we have to cater to the base of the pyramid. We cannot say that we will add some additional ingredients in this and we will take this price from, let's say, 10 to 20 rupees. That's going to be a price shock for the consumers, and we can't afford that.
Completely agree with you on that one. And that brings me to the base question of it all.
Yeah.
What does Britannia want to do now?
We want this company to perform consistently. Obviously, there are certain factors which have become more and more important with time. Making our portfolio healthier. I'm not saying healthy, I'm saying healthier. Making sure that we offer, different products to the base of the pyramid, but we bring in the right products for, people who are in SEC A and B. We want our portfolio to be enlarged. So our adjacency business, we are putting a lot of focus on. And I said earlier as well, the first stop is bakery with products which are in the adjacency space. And thereafter, we will see where else we want to go. Dairy is a big play for us. We've made very good progress with milkshakes and milk drinks. Not as much progress with cheese. Cheese has been growing, but small single digit. So we want that to move to the next level.
How do you define the next level? Because 2 years ago, I asked you, where do you see the adjacencies business? You said 3 years later, it'll be 35%. 5 years later, it'll be 45%. And 10 years later, you'd imagine a scenario where it is 50%. So 2 years hence, it's still at 25%. So 1 year later, will it be 35%?
Well, I hope so. Not 1 year, but maybe 2 years. Maybe we are running behind our schedule. But 2 years later, certainly. But, it should not come at the cost of biscuits.
Yes.
That's the main criteria. Biscuits have to keep growing. This is our bread and butter. This has to grow aggressively, and that needs to grow 2 times this rate of growth.
It's interesting you say biscuits is your bread and butter, but the metric that you're tracking right now in the company, what would that be? Would that be revenue growth? Would that be volume growth? Would that be distribution reach? Or I read an interesting one in your earlier conference call as well. You said volume per outlet, VPO.
See, volume per outlet is very important, right? So we've got 2 clear, things that we measure. One is volume per outlet. Second is covering areas which we haven't covered till now. And there are many small villages which we don't get to directly. So we'll work at both ends.
Could you give us some quantifiable targets for that over the next couple of years?
So our distribution targets, we will, increase our distribution by at least 100,000 outlets every year.
Got it.
On an overall basis, our volume per outlet should remain stable, right? Despite going to much smaller towns and smaller villages, which means that the volume per outlet needs to increase in urban areas. In terms of the SKUs that we sell in urban areas, we sell about 9 SKUs per outlet. Right? Now that needs to go up by at least 10%. So that 9 needs to move to 10, right? Now, what would that mean? That would mean that we are selling more categories, more SKUs into each outlet that we go to. So that's how we define our target.
Is margin an outcome of a lot of the things that you're doing? Should we look at it like that? Or are you targeting a margin and then back calculate all the rest?
No, nothing works without targets. So we have a target.
Which is what?
Well,
18 to 19%, what it is right now.
Well, we cannot give any forward-looking statement. We cannot give any forward-looking statement. The target always is to make progress on where you are at. As inflationary times get behind us, we will always be endeavoring to, move forward as far as margins are concerned. But I must say that we are in the top quartile of
your target
food company margins across the world.
There is the counter argument which goes like, India is such a beautiful growth market. Why worry about margins when you can keep increasing the top line? And there are companies, consumer companies, which have, not necessarily food companies, which have 25-30% margins, and they're not growing. So the street believes, what right do you have to have 25-30% margin when you're not investing in growth?
So that's a tightrope walk.
Exactly.
That's a tightrope walk, and you've got to do it really well, because I've seen a lot of companies go wrong there, right? And that's why I was talking to you about inflation, deflation, sine curve, etc. It's a tightrope walk. You got to make sure that you do not take the consumers for granted. You give them the product at the right price, and also keep an eye on competition and don't go completely out of whack. If you look at some of the companies which have gone wrong on that, you will realize that they just took their eye off the ball. And we do not want that to happen.
So your eye on the ball is maintain margins where they are with some improvement and continue to grow the core. At the same time, adjacencies grow at 2x.
Absolutely.
What does all of that mean in terms of numbers? Again, I ask you that because the last time we spoke, you said if I were to write a 5-year strategy note, of which we're 2 years into already, mid-teens growth would be a possibility. Obviously, a lot happened in the last 2 years for you to not realize that mid-teens growth. But do you think that is a possibility?
It's certainly a possibility. In a country like India, while we have seen a tough period, but once things come back, I think we'll be certainly in that zone, and not just us. A lot of our co-companies in the FMCG space, because that's where the country needs to be, right?
How far are we from that?
Well, I don't think we are very far. I think we are reasonably close to that, and I hope that that becomes the reality very, very soon.
And you can catch excerpts of that conversation all through the day on CNBC-TV18.